It's Brian Preston, the money guy.
So if we're going to talk about what a real financial advisor will do, I think it's important to talk about what they will not do. And look whose picture's on that.
See, I didn't even put together that I was the not real financial.
Look at mean mugging too.
Look
at that photo.
What's the look from Zoolander? You know what I'm talking about? What's he call that? Is it blue? Was it blue steel?
Blue steel
Is
or
it
something.
Blue, that's the blue steel right there. What do you think about that? So let's talk about what a real financial advisor will not do. And this we're just kind of speaking experience because these are the things that we are just admitting, hey, we're probably not experts at. This isn't something that someone who's looking for this service would come to us and ask for.
We typically, this is one that I'm always amazed when I talk to family and friends. We're not going to get you typically out of consumer debt. Here's a cold, hard fact. You talking about steel blue or
blue steel?
Blue steel.
Steel blue.
You can tell how many times I've seen Zoolander. Blue steel. Ben Stiller, don't get mad that I said that. But blue steel, it's what I mean. If I was giving you a cold, hard fact with that look, I should make you just hone in with that look right now.
I don't think I can recreate it.
Is that most successful people don't struggle with consumer debt.
No, one of the things that probably got them to success was either screwing it up and fixing it and doing better, or just never getting in that problem. They understand that being successful financially is about building and having positive net worth, not borrowing and having negative net worth.
Look, there's resources to get you out of that stuff. I mean, Dave Ramsey, we've done shows on it. You can, do-it-yourself tip is contact the National Foundation for Credit Counseling. You've got to break that cycle so that you can actually start building assets. And that's just, you don't need a financial planner to get you out of debt, because the last thing you need to do is stack on one more hand that's working on you. You need to get to a level of success where the advisor is a benefit that is guiding and shaping what you do have, not what you owe. Yep. That is just not a healthy thing.
The second thing that we think a real advisor won't do is, if you're working with a real financial advisor, they're not going to pitch you on how they're going to help you beat the market.
Yeah.
That's just not something. Now, maybe investment managers might want to tout that they can do that, but if someone's really talking a lot about performance and how they're going to outperform and how they're going to do this, they're probably focused more on investment management than they are on financial planning.
Man, my spidey senses would start going off. If you look at the stats we've done on all the shows on how often index funds are so much more successful, and it makes sense. Their costs are lower, their taxes are lower. It's just hard for managers to overcome that headwind that's facing them. So don't try to beat the market. It's not an easy process.
Another thing that we see poor advisors do, and unfortunately we probably see this one more frequently than anything else, they solve all problems with the same solution.
Yep.
You want to save for college? Oh, I've got an insurance policy for that. You want to protect against premature death? I got an insurance policy for that. You want to build for retirement? I got an insurance policy for that. If someone has very one-sided single answers to a wide array of problems, it might be a sign that it's not the perfect advisor for you.
And then the last thing I put on here, the financial advisor is not going to help you skip steps.
Oh, that's such a good one.
Because it's true, because we all are looking for the easy way. It's just like, if I've told this when I go to the gym, I've told one of the trainers and the coaches that I've worked with, I've said, if they could give me a pill to do this, and it wasn't like side effects like all the performance enhancing drugs,
you would do it.
Most Americans would do this. They would not put it. He goes, I wouldn't do it if they had a pill that would do all that without the side effects. There's no magical thing. And it's the truth. It's the same thing for financial planning and creating financial independence. You're going to have to do the hard work. You're not going to be able to skip steps.
Right.
So pay attention to that. This is a long-term journey. It's a marathon. Yep. You can't skip steps as you're building success.
Now, we laid that out pretty binary. What will a financial advisor for sure do, and then what will they not do? There is a little bit of a gray area. And so we want to kind of speak to that a little bit, because there's some nuance in there a little bit.
Yeah, because we have worked in these areas that we're about to talk about. The gray zone is really helping you control your spending.
Yep. Now, controlling spending is different than having debt problems.
Yeah.
Those two are not exactly the same thing.
Because you can pay attention to what's your cash flow, your cash management plan, what your expenditures going to be in retirement. How do you transition from saver to spender? Because that's a very important thing that a good financial planner will do. So that does fit into our purview. Mm-hmm. Keep going, Bo. I'm sorry.
No, I was gonna say, I think that another thing is they can help you understand what you can spend. Because one of the things that we have clients ask all the time is, am I saving enough? Or I want to go do this trip and I want to upgrade my car, but I don't know if I can. One of the big things we try to do with clients, especially when they're in the accumulation phase, is say, if you can set yourself up to pay yourself first, save what you're supposed to be saying, understand what you're building towards, you can remove a lot of the spending guilt that we see with folks who are still in the accumulation phase. If you have a good advisor who can help counsel you through that and tell you how much you should be saving and why you should be saving that amount, on the converse side, they can also tell you, hey, it's okay to go cover the back deck. It's okay to upgrade the car. It's okay to go on that trip. I think a good advisor can help you spend money in the same way they can help you save money.
And bridge that between your relationships.
That's right.
How often do we have the tightwad spouse and then the spouse that is reasonable but needs somebody to kind of be the arbitrator between and speak the language of their spouse that doesn't want to come off of anything, who's having, once again, kind of stuck on that saver versus spender. We kind of help break the tie on those things.
Yep.
We had put in here in the show notes, create an estate plan for you. What do I mean by that? Because we do a lot of this stuff. We do the checklist. We talk to people about guardians, beneficiaries, the structure of trust and things. But what do we mean by we're not going to be able to create an estate plan, or it's going to be a gray zone?
Yeah, we think that we can give you guidance and counsel on an estate plan. But ultimately, when it comes time to draft the documents, you really want an attorney that's going to do that. You want someone who's actually probates in the state in which you live, that they know the state laws, they know how the estate document needs to be written. What you also want a financial advisor to be able to do, though, is correct a poor estate attorney if there was a plan that maybe was too complex or it had too many moving pieces or didn't fit your situation. A good advisor should be able to review the work that an estate attorney does and be able to lean into that and say, okay, yeah, that's a good fit, or no, maybe that's not a great fit, but they're probably not going to be able to actually draft the documents or set up the trust themselves.
What I always like to say is that I always tell people, a good financial planner will go through like a checklist of all the things you need to have ready to take to a good estate attorney, and just the preparation will hopefully save you some dollars.
That's right. Yep.
That's a big part. Same thing, and that's a great transition to the last thing. Tax preparation.
Oh, yeah.
We do the same thing. I will tell you, I think one of the biggest value adds that our clients get the biggest kick out of is that we help consolidate all the 1099s and stuff from the assets we're managing and either get it to their tax preparer, or for the crazy do-it-yourselfers, we send it to them. By the way, I was calling my mom this morning. She lets me know that Frank is going to be doing his own taxes. So you know what that means?
Congratulations.
Brian is probably doing my
taxes.
mother's taxes, because I've told him they need to be working with a CPA. Oh, Lordy.
I'm so excited about that.
I just figured you'd find that funny because it is one of those things where we will help coordinate. I think a good financial advisor will kind of bridge that because, like I said, we're not trying to compete with the tax preparers, but we definitely make their jobs easier. And I think the ones that will embrace that when they know that we're not trying to hurt them or coming the way, they love having somebody that can work between them and the client to get things taken care of.
At the end of the day, we think that hiring an advisor can and should be a huge asset to your financial life. But it's a big decision, and we say this kind of jokingly, but we mean it. When we talk to a prospect, it's a little like a marriage. We tell them very early on, hey, we're going to go through a very defined, involved process before we even make the decision to work together. Because when we work with someone, we want to be working with them for the next 20, 30, 40 years. You should approach a decision to hire an advisor with that gravity, recognizing how big it is. And one of the best ways you can do it is educate yourself, understanding the ABCs, all the credentials, understanding what the different type of compensation structures is, understanding maybe some questions to even ask a financial advisor.
An educated consumer is a better consumer. And here's the other thing. This show showed me when we were doing the show prep, we don't have the deliverable yet, but you guys are going to need some questions. So instead of us going out there, because there's checklists, all kind of other things you can do for knowing what questions to ask a financial advisor, we're actually working on that right now. So I want you, and that's a great segue to kind of close out the show. You've got to go to moneyguy.com, check out our resource page. We do shows we get inspired from. We create things that you can use to accelerate your success plan. And one of the things we're working on right now, and in the next, hopefully, month, we will have questions you should ask a financial advisor. Sure. That will be a great resource for you. And that also applies to this abundance cycle. We talk about it. I told you, we get nervous about doing a show like this because it did seem like a lot of the stuff we said a good financial advisor is what abounds. So you're like, wait a minute, these guys just kind of sell themselves. This is what I would ask you to do. Go look at our other content, because this concept works is because we give away tons of free information. This is just how we are wired, is we want you to be successful. We want you to come to Money Guy Show to learn, apply the concepts, continue to grow, and one day you're going to reach a level of success. You're going to probably say, when do I need to hire a financial advisor? You're going to go find this show, and then it's going to hit you. This is the abundance cycle. I've now reached the graduation point. I don't know what I don't know. It's just life has gotten complicated, and I just want to make sure I don't run this thing in the ditch because I am now the CEO of a 7-figure enterprise. Let's get these guys in here. Let's make sure that I have a co-pilot. And for you young savers, you're now getting to the point where maybe you have $500,000 and you're like, asset location. That's a term I've never even heard. You're going to think about the abundance cycle, and we love doing this. This show started in 2006 as a just way to educate. It was supposed to be an education platform. It wasn't until like year 2.5 to 3 that we got our first client off of it, and that's when I was like, wait a minute.
We could do something with this.
We could get clients off of this? So that's why I always get so nervous when we talk about things like this, because I want you to know that our heart is in this. And I think that's why I challenge you. If this is your first show, you're like, oh, this is another group of guys trying to sell something. Go watch our other content. You're going to say, no, this is our passion, and we love to have people who work with us, and we love to have a team that has this passion of an educator and just makes things happen for the Money Guy family.
If you haven't had a chance to go out to YouTube, maybe you're listening to this out in iTunes or Audio World, make sure you go to YouTube, subscribe. If you haven't had a chance to check out our Instagram, we are now putting up videos and stories on Instagram so you can kind of see behind the scenes of what it is that we do on a daily basis. You can go check out our Facebook, go check out our Twitter. We love connecting with you guys. Go to the website, moneyguy.com.
All right, Bo. Money Guy team, out.